Welcome back to the Property Pilot. In this video, I discuss, is it worth investing in student housing? Maybe you've been on a course and it tells you to invest in HMOs. Maybe your mate down the pub has said, oh, it's all about students. Well, I've owned HMOs, I've owned student property, I've managed many more. And once you've watched this video all the way to the very end, I think you'll be able to answer the question whether or not it's worth investing in student property. For those of you that don't know me, my name's Marco. I'm a portfolio landlord, property investor, developer, and mentor. And I'm very passionate about helping people invest in property the right way. Now, let's define a HMO very quickly before we get into the main bulk of this video. A HMO is a house of multiple occupation, where 3 or more unrelated people live in the same dwelling. So for example, it could be 4 students coming together for the academic year living under one roof. Another example could be, maybe you've got 5 young professionals all in the same house, they've each got their own room, it could have an ensuite in there. That's a second example. But for this video, we're going to talk about students in particular. So a lot of people are really obsessed about investing in student housing, getting into this market. So I'm going to break down the pros and the cons, and I'm going to conclude with my opinion on what I think about, is it worth investing in student housing? And let's get right into it. So first of all, number one, the biggest plus and the biggest advantage in investing in student housing and HMOs is that your yield is typically higher than, say, a single buy-to-let property. So what this means is your rents are nice and high, which maximizes your cash flow, which means on a monthly basis you have more cash normally than what you would if you have a single buy-to-let property, which is absolutely great. We all want more cash, and really that's the main reason why people invest in property, because that cash allows us time and that freedom to spend our days doing whatever we enjoy. Obvious and really great. And this is why most people want to invest in student housing, for that return and for that cash. Now the second benefit of investing in student housing and HMOs, houses of multiple occupation, is that in some areas you can make a lot of money by converting a normal dwelling, which is classified as C3 as a planning use class, which is just a dwelling that you or I or a family would live in, converting a property from C3 to C4. Now C4 is the planning use class for HMOs. Now in most areas in the UK it's very difficult to do this because there's what's called an Article 4 direction that prevents property investors and developers from buying C3 homes and turning them into C4 HMO properties. So I'm in Leeds, for example, and in 2012 Article 4 was introduced. So since then it's been quite difficult to buy a property and convert it to a HMO in an area that you'd want to be doing that anyway, because the whole idea is Article 4 stops the uncontrolled spread of HMOs within a certain area. So yes, you could do it in some random area, but if there's no demand in that area, then what's the point doing it? It needs to be done in areas with high demand, so around universities, around the city centre, around employers and things of that nature. So a little tip here is maybe find an area that doesn't yet have an Article 4 in place, where you can legally, under permitted development rights, so you don't have to even apply for planning permission, convert a property from C3 to C4. Absolutely great, but they're difficult to find these areas. Another option I've got for you is to have a look at the existing Article 4 map within your area, or maybe an area that you're looking to buy in, and consider just purchasing on the fringe, just outside the Article 4 map, where again you can legally do this. And maybe one day, 5 years down the line, the council will extend this map and all of a sudden your property will be swallowed up by this larger Article 4 map. And that's a good thing, because once your property is swallowed up by Article 4, and providing you have all the documentations to show that your property has been let as a HMO prior to the introduction of Article 4 in your area, well, you can continue using it for that purpose. There's a bit more to it, but that's the nutshell. And I've had great success doing this in Liverpool and in other cities, and I've made hundreds of thousands of pounds doing this, but this was in the past. Now it's a little bit more tricky to do, with councils have cottoned onto it. So they're the main 2 benefits of investing in student housing. You typically have a high yield, which means more cash, great, and there's area to add value by turning a property from C3 to C4 in some areas. However, they're, in my opinion, the only and the main advantages when it comes to investing in student housing. Now let's balance this out. Here are the cons, and I'm going to list them. First of all, it's the hassle, and I can't stress it enough. It's hassle to manage a HMO. It takes more time, it takes more energy, and some people can get stressed out by managing a HMO. And what I mean is, let's just say you've got 4 students in a property. Well, you know, you've got 4 tenants. You don't just have one tenant. So maybe you're, communicating with your tenants more often than you would be in a single buy-to-let over here. Again, that's going to take more of your time. Or maybe you've got a property and you let the rooms out individually. And because you let the rooms out individually, you'll have tenants coming and going at different times. So unlike, say, a group of students that come together and every year you've got to find a group of new students, you're renting these rooms out individually to students. So you've got people coming in and out, checking in, checking out at different times throughout the year. Again, that takes more of your time up. So to summarize, it takes more of your time and it's more hassle to manage a HMO. But again, you will make more money for doing this. And I'm going to touch upon a really important concept at the end of this video, which relates to time and HMOs, so stay tuned for that. But let's move on to the next con of HMOs, which is they take more maintenance. Now, don't get me wrong, this necessarily isn't a con. If you know what you're getting yourself into, that's absolutely fine. But maintenance takes time. Even if you're not doing the maintenance yourself, maybe you're just managing it and arranging for the works to be done, it still takes time. Again, because you've got, say, 4 or 5 people living in one dwelling, you're going to get more wear and tear, and more things are going to break, and your maintenance is going to be higher than what it would be, say, on a normal single buy-to-let over here. It's really important you understand that. Now, moving on from maintenance, is a HMO, you'll actually have to refurb a HMO more. Well, what do you mean, Marco? Well, if we just follow on nicely on from maintenance, you've got more people living in the HMO here than you would have people living in a single let buy-to-let. You get far more wear and tear. So maybe in a HMO, you've got to do a bathroom every, say, 6 or 7 years, where in a single buy-to-let, you can do a bathroom every 10 or 12 years. So you've got to refurb a HMO more often than you would do a single buy-to-let. And refurbs cost a lot of money. You know, a new bathroom can easily cost you £5,000 depending on the spec of that bathroom. Again, a new kitchen can easily cost you £5,000-6,000 depending on the spec and the appliances that you use. And the last con I'm going to share with you here today regarding student housing and HMOs is the risk. And there are several key risks, in my opinion anyway. The first being the rental reform, the proposed rental reform that's coming into play. Now, as it stands at the moment, a group of students could move in and from day one they could serve notice and be out in the next month. So there's going to be no such thing as a 12-month contract anymore. So a tenant can move in, and if they don't like it for whatever reason, they can give their 1-month notice and vacate the property. That is it. Now, with student housing, this is a huge issue, because here's why. Student properties are typically let for the academic year. So they're let from September to August, and that's how the academic year works. But what if you've got a group of students, they move into September, maybe 2 of them have dropped out of uni, and all of a sudden they've given their notice. So you've got a property that comes back to you in October vacant. How on earth are you going to fill that property? Bearing in mind all the students have found accommodation for the academic year, how are you going to rent that property? At the worst case scenario, you're going to be going, what, 10, 11 months with no rent? That's a huge risk in my opinion. Now, we don't even need this rental reform to come in to make this a realistic possibility. You know, if you've got a student property, and let's just say there's an oversupply of student properties in a particular area, well, let's just put this rental reform aside. You could quite easily not find a tenant for that academic year just because supply is so great and the tenants have so many properties to choose from. And in some areas you'll find this. You'll find the market's absolutely saturated with student housing, and you may have to actually reduce your rent a lot to attract the students into your property. And this is why it's always worth offering a premium product when it comes to HMOs, because a premium product is going to sell far quicker than an average or a below average property. The final risk that I'm going to share with you, and there's many more, but the final risk is, look at energy prices, for example. How volatile have energy prices been? And of course, when we let a property, don't get me wrong, we don't have to, but most properties that we let all bills inclusive to students. And because we let them all bills inclusive, that includes, you know, the electric, that includes the gas and everything else. And you know what's been happening to gas and electric prices. And you know, who pays for that? Well, we do. So we as landlords will pay for that. And it's so hard to forecast and it's so hard to plan when energy prices are going all over the place. There's really only so much we can pass that on to the tenant. So you know, you may have a good year and you may have a bad year, and the bad year may be because utility prices have increased drastically. So there are the cons, but let's come on to the killer question. Is it worth investing in student housing? Is it worth investing in a HMO? Tricky question, right? Now let me propose an idea to you. Yes, you're making typically more money on a monthly basis by investing in a HMO than what you would be over here in a single buy-to-let. I understand that, but how much time are you putting in to manage this property? So yes, you're making more money, but you're putting in far more time. Now here's a really important question. Work out your hourly rate. How much money are you making on an hourly basis in your properties? So let's say we've got a HMO over here. It's making us, say, £500 per month profit, but we've got to put in 5 hours per month to manage this property. Our hourly rate is £100. Not bad, but what could we achieve over here? Let's say we've got a single buy-to-let property over here. It's only making, say, £300 per month, so it's not making 500, it's making £300 per month. But we can get away with putting in 1 hour per month managing this property. What's our hourly rate? £300. So would you rather earn £300 per hour in a single let or £100 per hour in a student HMO? Again, I know the answer. But here's the thing, it's not as clear cut as I've just described. If you're starting out in your property investing journey and you're willing to sacrifice your time, well, of course you're going to invest in HMOs because you're willing to sacrifice your time. But really important, there will come a time in your property portfolio journey where all of a sudden you value your time more than money. And this is when it's really important to change your strategy and to recognize that you need to move away from HMOs HMOs and start investing in something that's more passive, like single buy-to-let property. And that's why now I will only invest in single buy-to-let property. I will not invest in HMOs because I know it's going to take me and my team a lot of time to manage that type of property. Whereas over here, it really is truly a passive income. So that's my answer to the question. I personally do not invest in HMOs anymore, but they were very kind to me when I started investing in property. However, being said, it was a completely different market then. The returns in HMOs were much higher when I started investing in property. Article 4 direction really wasn't a thing in most cities in the UK, so again, you can make lots of money just by converting a property from C3 to C4. Now, Article 4 is the norm in cities, so times have changed. So that's my opinion on student housing, and here's an alternative strategy that may be, just maybe, better suited to you, and let me briefly describe it. Now, I mentioned this concept in a previous video, and if you read any book on investing, it basically says this: buy low and sell high. But I've worked out an even better way that we can apply this logic to property, which is buy low, so buy a property below market value, and don't sell high, we refinance high. So we're buying a property and we're refinancing it, and the reason why we're not selling is we don't want to sell, because if we sell this property, first of all, we're losing that rental income, and second of all, we've got to do it all again. We've got to find another property, and third of all, if we sell, we have to pay tax. We have to pay tax on that gain. So here's why I don't want to sell, because if we just refinance and don't sell, we're still making money off the rent. Number two is we're not paying any capital gains tax because we're not selling. We're refinancing at a higher rate, and what this means is because we're refinancing at a higher rate, we can pull cash out that property to go again. So it's more or less as good as selling. Don't get me wrong, you're not getting all the cash out that you would do as if you were to sell the property, but we're getting enough to go again. Maybe once we group this cash with our rental profits, we've got enough money to buy our very next property. And number three, the reason why we can do this and pull out so much cash is because we bought below market value in the first instance. So really, we're not doing anything, we're not doing any painting, decorating, we're not adding value by a refurbishment in any means whatsoever. Just because we bought it below market value, we've got equity in the property, and we can realise and take out a percentage of that equity when we refinance. And by doing this with single buy-to-let properties is a great and passive way to scale your property portfolio. And you can go from 1, 2, 3 properties to 10, 20, 30 plus properties in a very short time span. So Marco, how do I do this? How do I buy low and refinance high? Well, first of all, if you want to buy low, consider signing up to our weekly property newsletter. Every single week, we have a property opportunity to purchase below market value. In fact, we don't post any properties that are even close to market value. We've got to be getting a good discount for it to be worthwhile posting in our email. So how to sign up to the list? There's a link in the description below, or go to the website www.ms7.uk/email and sign up. And now the reason to sign up is not only is this completely free, but second of all, you get first access to these amazing below market value opportunities directly to your inbox. Now, number two, if you're serious and you really do want to scale your property portfolio and you want to invest in property using this strategy, and you're open to bringing on a coach, to bringing on someone who's been there, done that, and got the t-shirt, well, consider working with me. So the way to do this is go to my website, www.ms7.uk, click on the coaching and mentoring page and scroll to the bottom and book a call with me, and we can see if we're right to work with each other. There's also a link in the description. So I hope this answers the question. I hope you now know whether or not you are right to invest in student housing and whether it's right for you to buy HMOs. There's no right, there's no wrong. It depends on what's important to you and where you are in your property investing journey. But for me, now I've got a strong preference for single buy-to-lets, for easy, simple, single buy-to-lets that we're buying below market value and making loads of money on. So if what I've said has resonated with you and you've got a question maybe, comment below. As you know, I respond to all comments we receive on the channel personally. I sincerely wish you all the very best in your property investing journey. Goodbye.